Welcome to the January 12th, 2026 advanced report from McGowanGroup clients. Oh my God, the economic news this week, it is shockingly positive. I'm going to walk you through it, and then I'm going to cover what it means for portfolios and the way ahead. Atlanta Fed, they've been our friend over the last 3 years, where all the economists said the wheels are coming off the go-kart, and then they said Trump is bad and tariffs are going to kill the economy. What's really happened? Oh my gosh. Here we are. Atlanta Fed, 5.4% recent estimate for fourth quarter GDP growth, and the Atlanta Fed has been the most accurate. I'm going to beat up on the other Fed bozos here in a second because, wow, if I look at this, 5.4% economic growth is amazingly huge. As a matter of fact, the U.S. economy has only grown at 6% for a full year. It was 1984. It was after deregulation, tax reform, and we grew at 6% for a whole year. 5.4% is a blistering pace. The 20-year average is about 2.1%. Well, that's more than double average. What were the economists saying? Look at these bozos. Their forecast consensus was below 1, and the highest guy wasn't even 2% growth. This has been a repeat pattern. We keep hearing stuff in the media that leads us the wrong way on the investment portfolios, and I'm underscoring that. Now, there was more good news than just the GDP growth, because you think, okay, 4.3% GDP growth in the third quarter, 5.4%. Inflation must be running away. No! October, November, inflation for the 2 months combined was 0.2%. You annualize that, it's about 1.25% inflation. This is exactly what happened in 2018 with tariffs and 2019. You had low inflation, surprisingly, after tariffs. Intuitively, we wouldn't think that. But if something's true, no matter what side of the political aisle you're on, you've got to acknowledge what's actually true. And it turns out that if you sum up the 4 quarters of GDP that have already happened, and we take Atlanta Fed as reasonably accurate, you are 3.3% for 2025. Wow. And why wouldn't we have inflation? Inflation for those 2 months I cited is low. The Fed is way behind the curve. As a matter of fact, they published in December that their growth estimate was 1.7%, and all the economic bozos in the suits, they're saying, oh, 2025 is going to come in at 2.4. No, we ran the numbers. It's about 3.3 for the year once they're done. And 2.3%. The Fed did come up from 1.8 to 2.3, acknowledging they were way behind the curve because Orange Man Bad was supposed to kill the economy, right? So about half the country is so pessimistic that they can't even stand it. Well, why wouldn't we have inflation for October, November? One was the government shutdown, but we had November in there. It should have snapped back. Wow. Let's look at this. Productivity is the answer. This is how much stuff do you make for the dollar or unit labor hour, right? How much stuff gets made. Productivity was up 4.9%. Now, it's easy to explain. You get more stuff more efficiently at a lower cost. Wow, that's deregulation taking hold. And to Preston Lane's point, it is AI efficiency. You're getting more efficient. We're using it for analyst reports, subject to verification, because AI does hallucinate. And you don't want them guiding the portfolio if they're subject to hallucination. But AI productivity growth off the charts. And notice, these are the first 2 quarters above 4% since 2023. That is absolutely amazing productivity growth, explaining the low inflation. Now, what's the other factor here? If you go to usdebtclock.org, they have the estimate of the federal budget deficit. This number was 2.1 trillion about a year ago. The budget deficit, 1.75 trillion and falling. That is moving in the right direction. I know it's not a balanced budget. That may be a pipe dream, but economic growth combined with lower cost, the government shed 270,000 net new jobs. That's why the jobs numbers have been all wonky, because they laid off 162,000 government employees in October during that shutdown. So you've cut 9% of the federal workforce. You're starting to reduce costs, and that commands respect for the U.S. Treasury diffusing the debt bomb of the 38 trillion. And everybody's been worried about, the debt, and interest rates will go crazy and will be like Argentina was 10 years ago. But that's actually not the case at this point. So, shockingly good news was the theme of today's program. And this is the McGowanGroup Wealth Management first quarter 2026 client update. If you subscribe, it'll come to you automatically. And if you get on the subscription list at networthradio.com, you'll get the other research that goes to our clients, communicating what's actually happening and what are we going to do about it in portfolios. So when we go to the portfolio level, no client left behind, no dollar left behind. We are fiduciaries. I'm Spencer McGowan, President, McGowanGroup Wealth Management, your financial weatherman. Let's go to the next topic. What's working so far this year? We got about 1 week. There's some amazing things happening. And this is where, if you're going to make decisions in a portfolio, you start to get a clue of what's actually working right now, and you broaden out what could go into that portfolio. So, SanDisk, 52%. AI requires that you remember a lot, and you have to have the storage, and you have to be able to recall it. So it's not just the NVIDIA chip that lets it run, it's how you store stuff. And that's the data center build out. Lam Research, 23%. SanDisk, 52% in the first week of trading. Wow. Intel up 21%. They're reviving after 3 years of misery for Intel shareholders. Micron Technology, 18%. We see the pattern. Microchip, 17%. United Rental, 17%. That's construction, manufacturing. Schlumberger, Halliburton, and Valero, all above 15%. Venezuela. You're going to rebuild the Venezuelan oil fields once they get a negotiation. It didn't cause oil to get smacked down. It underscores the fact that the Gulf Coast of Texas and Louisiana is absolutely the most valuable infrastructure in the world. And of course, the Venezuelans took the properties from the U.S. oil companies. Now they're going to redevelop it. And what that sets the stage for is bigger profits for those companies. Even with $58 a barrel oil, they're learning how to still make a profit. God forbid you have a spike or a supply shortage, because the oil that's coming to the U.S. in reparations, I guess. First time a conservative said reparations. But anyway, they're taking that oil, right? Hopefully they'll just put it in the Strategic Petroleum Reserve. But that also says with that oil, it's not going to China, right? And with shutting that down, China's got to buy more oil somewhere. So stay tuned for what happens next. If we look at the bottom performers, AIG Insurance at the bottom of the list again, 10%. ServiceNow down 7%. First Solar down 7%. That's just the first few days of trading, but it gives us a read on what do we want to do in the portfolios. What are we doing about it? We love energy infrastructure. We have great fixed income and tactical safety allocations, along with some great tech names in the portfolio as well. You can find us at networthradio.com. Thank you for joining us. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the Longer Play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.